Hello and welcome to traders and investors. Today is April 11th, and I'm glad to present to you the daily market review prepared by analysts and experts from fx.cu portal. Here we go. And we're starting with the major, EURUSD. Demetrius Tapas describes. EURUSD is trading around 1.0743. below the 21 SMA and a 200 EMA. We can see on the H4 chart that the euro made a strong bearish move after falling below 1.0864 and below the technical pattern. Yesterday, after the inflation data from the United States, the euro fell to the low of 1.0724, which represents a decline of more than 1.2%. The fall of the euro was triggered by the inflation data from the US. It suggests that investors expect that the Fed will continue to tighten its monetary policy, and in turn, this could cause the euro to continue falling in the medium term. Before the US inflation data, the euro was trading within a triangle pattern. A break of this pattern confirmed the bearish momentum. Also, the strong resistance at 1.0864 acted as a strong top. Currently, we see that the euro has consolidated around 0.8 Muri level, located around 1.0742. In case the euro trades above this area, a technical rebound is expected to occur in the coming days, and EURUSD could reach 3.8 Muri at 1.0803. On the other hand, a consolidation below 1.0740 could be a sign of the further bearish movement, and we expect the euro to weaken and reach minus 2.8 Muri level at 1.0681. Technically, the euro is showing a bearish signal according to the Eagle indicator, because there was a strong bearish movement the previous day. It's expected that there will be a technical rebound for the current price levels that could cover more than 50% of this fall. So the price could even reach 61.8% Fibonacci and then resume its bearish cycle. Our trading plan is to buy above 0.8 Muri level with targets at 1.0772. That's a first target, and 1.0802 is the second target, and maybe 0.833 as the third target. We expect a technical rebound in the EURUSD pair in the coming hours due to the formation of the double bottom. There are pivot points as a lifestyle. Evangelos Poulakis explains how to trade GBPUSD currency pair. Yesterday, bears were very effective in pushing off from the zone of influence of the weekly short-term trend, 1.2704. And the daily medium-term trend, 2706. They surpassed the weekly support, 1.2577, which may now work on a retest, and updated the low of 1.2538. Now the market is focused on the nearest support zone, combining levels from different time frames, 1.2503, 2481, and 24.64. On lower timeframes, the main advantage is on a bear's side. Targets for further decline today can be noted at 1.2468, 23.99, and 22.80 classic pivot points. If the current corrections continues, the key levels determining the current balance of power will be of primary importance on its path. They are currently located at 1.2570 and 1.2642, central pivot point of the day, and weekly long-term trend. A sustained move above the trend reversal will create conditions for strengthening bull sentiments. The next bullish targets can be noted in the current conditions: 1.2665, 1.2775, and 28.44. Let's trade with the MACD indicator. It's time for USDJPY currency pair. Jakub Novak presents. The USDJPY pair finally received an external impetus and broke out of a 2-week consolidation, trading higher. Yesterday, the price breached a strong resistance at 151.95, 152.00, formed by a target level and a price channel line. Now the pair can reach the target of 154.25 and 154.40, formed by the target level and subsequent embedded line of the global price channel. On the 4-hour chart, the price has settled above the MACD line. The Marlin oscillator has edged down, and apparently it's ready to rise further if the external environment works in favor of the European Central Bank meeting. Today, the pair may be influenced by the US Producer Price Index, which is quite important after yesterday's CPI. The PPI is expected to increase from 1.6% year-on-year to 2.2%. That's all for today. See you next time.